You guys can see my screen?
Yeah.
Yeah. So we'll just start with like some questions that could, kind of like theory question in that type. We'll see if you guys have a understanding of it, and then after like the theory, we'll go through everything again, and I'll tell the answer to everyone. Okay, so let's. Okay, so I'll put my chat here. If you guys want to either answer by voice or by chat, and then I'll try to take the consensus of everyone's answer. Yeah, I'm recording. Yeah, all right. Okay, so assume you're using statistical sampling for your test of controls. If the test of controls results that the sample deviation rate is below the tolerable, sorry. If the test of controls results that the sample deviation rate is below the tolerable deviation rate, then the control is effective, you accept. The control is ineffective, reject. You decide to rely on control, both A and C, none of the above. So I'll give you a minute or two, just think about it, and either you got write it in the chat or you could just yell out the answer if you feel confident. Or if you have no idea, just write no idea in the chat. C. Okay, good. David says C. Patrick C. Okay, both of you guys. Okay, D. D. Okay, David changes to D. Okay, that's good. We'll go to the next question. In which of the following situations are you most likely to use non-statistical sampling than statistical sampling? There's specific risk factors. There's a lot of variability in the values of the items in the population, all of the above, or none of the above. What are we feeling here, guys? Okay, we're going C. C. Okay. All right. Looks like we're going with more C for this one. The other one. What is the objective of the substantive test of detail? To obtain effectiveness of internal controls, to obtain evidence about year-end balances, all of the above, or none of the above. B, to obtain evidence about year-end balance. Laurence says to obtain effectiveness of internal controls. Okay, so it's either A or B. Any other answers? B, Patrick is more B. Okay, I see. We're more B here. Next question. Which of the following is a tolerable misstatement that you would use in your substantive test of details? Performance materiality, tolerable deviation rate, acceptable sampling risk, or none of the above? This one's a bit harder. So these are not on the exercise document. So these are just the ones that I added to the tutorial. It's gonna be recorded, so you could just take a look after. So these are not from the book, nor just I found them myself. Okay, so Gabriel says A, performance materiality. Do we have any other? Okay, Patrick has no clue. Okay, he doesn't even want to try. So okay, so I think Christina wants to say C, acceptable sampling risk. Okay, so either A, C. Interesting. Next one, detection risk is risk of an incorrect acceptance based on detailed tests times analytical procedure risk. Risk of an incorrect rejection based on detailed tests times analytical procedure risk. Inherent risk times control risk, risk of material misstatement times acceptable audit risk, or none of the above. Okay, C, Laurent says C. We have any other answers? No, sorry, I think Laurent said yes for this answer or for the other one, not sure. Okay. Anyone has any thoughts? Okay, Patrick says D. D. Okay, I think we're more with D. If you're testing the internal control, the control risk will be determined after you complete the testing, was determined before you started your testing, and can be high, medium, or low, or none of the above. Which one? A will be determined after you complete the testing. Okay. Any other answers? Sure, that says B. B. Okay. Gabriel says B. So we're moving to the B. Which description best illustrates non-sampling risk? Using a sample that is too large and therefore conducting more work than necessary. Using a sample and failing to recognize errors or deviations in the documents examined. Using a sample that does not represent the population, or none of the above. Okay, Gabriel says B. Okay, B. Okay. I think this is the last one. You perform a test of controls for the prepaid expenses. All necessary controls were in place and they were all effective. What can you conclude based on that? Prepaid expenses are not materially misstated. Errors in prepaid expense do not exceed PM. Both A and B, neither A or B. Okay, Christina says B. Errors in prepaid expenses do not exceed PM. Okay. Oh, that was the report. Okay. Does the answer change or so with B? We're feeling B, A, not sure. Okay, so if you're not sure, usually you put C, right? Okay. That's a good tip. So now we're gonna go with the theory. Okay, so last tutorial, the last thing that we touched upon was yes. Yeah, so we're gonna redo everything. I'll do all the slides and then I'm gonna redo all the questions and then I'll let you know the answers. All good? Perfect. So last time we talked about inherent risk. We touched a little bit on control risk. Today we're really, talk upon the control risk, the effective of the design, is it operating effectively? So we're gonna start with what is the responsibility for the auditor or management. Then we're gonna have, as auditors, we're gonna have to do a control risk assessment. And then what are the procedures that we're gonna be doing for the assessment? Then we're gonna be evaluating the system of internal controls. And lastly, we're gonna have to do an audit approach. So what are you actually gonna be doing during the audit? So let's start. Is it responsibility? So as auditor, you have to understand the internal controls over the financial reporting. So whether the auditor will be relying on internal control or not, he has to understand The controls are relevant to the audit. More specifically, assess the risk of material misstatement. So understand internal controls and evaluate the components of the system of internal controls. Okay, so let's say I have 10 invoices of a customer. These invoices are like $10 million each. Instead of doing like all the test of controls, make sure that everything's fine, and then just doing substantive, it'll take too much time. I might just do substantive, right? Instead of doing the test of controls. But you still have to have an understanding of the test of controls, even if you're not using them. So that's your responsibility as an auditor. Good. Okay. So control risk assessment. So when we're doing the test of controls, we're not just looking at the end. We're looking before, in the middle, and at the end. And the reason why is because it's going to take us a lot of time. And if we could take a few steps at the beginning and say, look, is it actually worth looking at all the test of controls, or maybe I'm going to put my control risk as really high, and then just do a lot of detection risk. So these are the few things that before like just coming in the engagement, or like just looking at the surface, this is what we're going to be looking, right? Management has integrity. So if you think of a house, the foundation is management integrity. If they're bad, the management, then you could pretty much know that everything above it will be like really bad. So that's why we're going to be looking at management integrity. That's the first sign that we're going to be checking. And then you could be looking at maybe before the engagement, is there any risks to the company? Maybe they have like jewelry, so we're going to be hiring an IT specialist. Oh, sorry, not IT specialist, an appraiser. And let's say that it's a company like IBM that has a lot of technological behind it. We're going to be hiring someone that's a specialist in IT. So that's pretty much the conclusion here. So weak foundation, assessment of control, auditors' expectation that internal control will neither prevent material misstatement. You can take a minute to read that if you want. Okay. So what are the types of procedures for risk assessment? So as the auditors, you're gonna come there, you're gonna assess the control risk, and these are the tools that you have in your hands. So you have inspection, inquiry, observation, reperformance, IT general, valuing the system of internal controls, documenting the system of internal controls, audit software, and data analytics. So the first five, like you'll have to remember, and I'll show you like in the slides after what exactly you have to remember. And it's more for the final than for the midterm. So we'll take a look at each of these like individually after this. Okay. In the procedures, what you could do is interim procedure, right? So let's say an auditor, you work for PwC, it's at the end of the year. You might have 5, 6, 7 cases open on your table, and it's too much work. So what you want to do before that is say, look, I'm going to be doing the testing for the first maybe 10 months, and then at the end of the year, there might be like 2 months where I'm going to be doing some testing, just to make sure that you have enough time to do everything. Did someone have a question? No, okay. So that's the interim procedures. That's interim part of the period that's before year end. But to do this period, to do this like interim work called interim procedure, you have to understand the internal controls. You have to test internal controls, make sure that they're reliable. If they're not reliable, then you can't be doing the interim procedure. You're gonna have to wait all at the end of the year and then do everything. And as an auditor, you would rather do like a lot of things before it gets busy than when it gets busy, and then you have too much things on your plate. So you have to test and control, update and evaluate auditors' previous experience with the entity. So these are just a step that you would have to take. Okay. So in the interim procedure, what you will be doing is a walkthrough. So walkthrough, now this could be a quiz question, and he might be saying like, what is a walkthrough? Well, it's when you just take an item and then you're just try to like bring it from A to Z, like try to circle back to whatever it did in the internal system and look at maybe is there any deficiencies in the system or not. Then there's the IT general. So when we talk about IT general, there's really two things that you have to remember. So who has control over the program changes to the software, and who can change the program is it a software or is it something maybe like an engineer in-house that does it, right? So two things: who can control it and who built the software. So if it's controls over the program changes, to the software, it could be like maybe you have someone that's a super user access, right? Your CEO maybe has access to every account. So as an IT specialist, you have the duty to say that, look, this person could be alternating the account, so we have to watch out for him. And then for QB is QuickBooks. So let's say you have QuickBooks and you're an auditor. Well, it's way more reliable than some software that an engineer did, because then you're gonna have to be testing all that software. So that's then logical access is everyone a super user who can access it. Exactly. Okay, so these are the methods to document the system of internal control. There's 3 ways to do it. That's one of the procedures that you could be doing. So narrative, right? So pretend it's a story. So every time we do interim testing on a new process, walk through the life of this item. So just tell it like how it operates, just basic steps. And then the flow chart, this is where you really draw it, like you did in COM, was it Lucidchart, COM 225, something like that. And then there's the ICQ, which is more of the questions that you could answer either yes or no, like is there any deficiencies? Like let's say, is there 2 people doing the cash account and the journal entries, or is it just 1 person? So if it's 1 person, yes. If it's no, then that's how you would assess it. Okay. Is there any questions so far? We're all good. Okay. So now we're going to be evaluating a system of internal controls, right? We're going to be looking at if the control risk is high, is it low? So these are the steps that you would be taking. Okay? So the first one is strength versus weakness. This is more for the case writing at the end of the final. You'll have to say the strength, but also the weakness. But whenever there's a weakness, you have to know that it could be turned into something positive. And there is the letter of recommendation for the client. If there's any deficiencies, we'll look at that after letter of recommendation, and another type of letter to more of the board. Is there any mitigating controls that don't really reduce the risk of material? When evaluating design of internal control, the walkthrough, is this control effective or either preventing or detecting a material misstatement, right? Make sure that if there's risk assessment, it's a control, it's actually working. It's just not there to be pretty. Yeah. Next, implementation and competence. So after determining if it's preventing or detecting, right, you want to observe if the control has been implemented, exists, okay, is actually there. And then you would evaluate the competence of the people. So the people inside, are they all junior accountants and they don't know what they're doing? Or is it really competent people that are doing the task? And we're talking about 2 things. Design effectively, but also operating effectively. So these are the 2 things that you have to look. And for that, right, there's the people carrying the control and the IT infrastructure. That's
probably 1. I told Amanda, Martina, would
I think someone's not muting themselves. Wait, who's it? We good? I'm gonna mute someone. Okay, we good. Right, so control might work in theory, but does not mean operating effectively. Same thing with IT technology. Okay, so now we're looking at the deficiencies in the internal controls. There's 3 levels that you have to remember. Number 1, control deficiencies. Right, something not properly designed or not operating effectively. Person not authorized to do X. So let's say that you have this person, they have the key to the cash register when they're not supposed to. If it's a control deficiency that has no impact on audit, we're not going to be wasting audit committee's time on it. So let's say, same example, the person that doesn't, this extra person has a key to the cash. We're not going to bring it to the board, right? It's not worth their time. Then we're going to have significant deficiencies. 1 or more control deficiencies are less severe than material weakness. So material weakness, we'll see this after level 3, but still important enough. to merit the attention to those charged units. So I'd say like it's more about the accumulation of control deficiencies that bring a significant deficiency. And then lastly, you have material weakness. So significant deficiencies that result in a reasonable possibility that internal control will not prevent or detect material financial statement on a timely basis, right? So financial statement, that's really the important word here, and on a timely basis, because all the controls at the end of the day, they all flow through the financial statement. And as an auditor, that's your role. You go there, check if the numbers are, are they legit or not. So we need to understand, like, is it, level 1, level 2, level 3? Well, I did a little table here. So if I have my laser here. Okay, so I have my laser here. So if you look here, if the likelihood is low and the dollar amount is low, we're talking more about control deficiency. If the likelihood is high, dollar amount is low, then it's significant deficiency. If the amount is high in dollar values and the likelihood is low, then we have SD again. And then if the likelihood is high and the dollar amount is high, then we get material weakness. All good? No questions? Okay, perfect. Okay, so let's say you do see a control deficiency, but you always have to check, is there something that compensates for it? And usually this happens a lot in small firms where you might have one person doing too many things, but maybe you have something compensating for that. And that will take out the deficiency. So see segregation issues where the same person can generate an invoice and pay vendor, weakness of internal control, but may have a compensating immediate control, offset lack of segregation. Okay, so let's say in a small company, there's one person doing the journal entries and the cash disbursement, but maybe you have the CFO or the CEO, whatever, always checking every transaction. Okay, so that's your mitigating control. Okay, so effectiveness of client's control system. This is where you would adjust your DR. So is the design of control effective? So you're going to be looking at, maybe the plan that they have, and in reality, is it the same thing, or is there any deviation from what was supposed to happen? And then is it controlling, is the control operating effectively? If you're saying that this person has to know these competence, and in real life, they just graduated from university and they don't know what they're doing, that's a deviation. Okay, so that are the two things that you have to do for internal controls, and emphasis on 1 and 2. So since if the design is weak, control are max, they are low, more work, no more time. Okay, so as an auditor, you want to do the less work as possible. Okay, but you want the same assurance. So we're going to be putting a lot of time in the control risk, because if we assess that the control risks are bad, then we have to do a lot of work. So that's why it's important that if we know that control risks, let's say they're good, then it'll save us a lot of time doing all these substantive testing. So let's say you put 10% more time to look at if control risks are good or not. It takes a lot of time, but then it could save you 30% on all the substantive, right? Substantive is really like the dirty work. You're in the trenches, you're sweating. You don't want to be doing that. You want to be looking at control risk, and you would prefer it when it's high, but it's low, sorry. Okay. So control risk matrix, don't think this is going to be in your quiz, maybe just understand it. So here is just that you have a board, and you want, for every control, there's like a control, for every like assertion, every control, you want an assertion to cover it. And you'll be looking at it and you're like, oh wait, actually here there's nothing here, so we might put something in place. But that's really pretty much it that you have to know for this. And at the end, you may have strong controls over some assertions and weak controls over other. Your plan might be, well, I think that this place has more risk. We're going to be putting more controls in this risk. Okay. So what are the different types of system of controls? Outsource system. Okay. Can someone try to tell me like what exactly is like a type 1 versus a type 2? Just like really simple, like without reading all of this. Someone wants to try? No one wants to try? Come on, guys. Type 1, type 2. Okay, so if no one wants to do it, I'll do it. Okay, so usually when there's a type 1, type 2, we would use it like, let's say you're it's a big company, and then you issue all your payroll, you're sending them to ADP. ADP just does payroll, so there's this big company. But as an auditor, when you're looking at this company, well, okay, so they outsource all their payroll, but you still have to look at the auditing behind it. So you're gonna say, oh well, ADP, give me the type 1 and type 2 documents that you have. And you'll be like, okay, I'll send you the type 1 document. But the problem with the type 1 document is that it'll just show you the system if it's designed effectively, not operating effectively. And as auditor, you want to make sure that if your control risk is low, that you know that it's designed effectively and it's operating effectively. So that's why you want the type 2 report, which is like, are we good or not with the outsourcing of the payroll? Okay, so that's why you have to remember. Type 1, no bueno, not good enough. Type 2 is good because we know that's designed effectively and it's operating effectively. So who does this type of report? It's another auditor, might be some guy from Fremont Chabot, that does it for ADP payroll. Yeah, but there's two you could use it. So I told you that type 2 report is good, but there's two reasons why you can't be using it. So number one is that we're relying on specific types of controls that might not be on the scope of the type 2 report. And then the year end is not necessarily identical in type 2 report. So let's go back to number one. Let's say that your scope is accounts receivable. You're looking for accounts receivable, then they give you a type 2 report, but it's on payroll. That's not your scope. So it's not good. Can't be using it. Number two, it's the year end. So let's say that January 1 and then June 30th, you see the reliance. You can rely here because the ADP issues a report which encumbers every day before that from the beginning of the year. But here you have no reliance. That's the problem. You can't rely on it for the last 6 months. So even if the type 2 reports, yes, it is operating and designed effectively, but it's only for the first 6 months, not the last 6 months. Okay, so that's the issue here. Are we good? Okay. So Laurence asks, so only for interim. So do you mean like would we ask this only during the interim period or yeah, so this is not the interim report. This is type 2, type 1 report. It's called the 3416 report. So there's no interim report. It's more like interim period. Interim period is like maybe 1 month or 2 months before you're going to be doing a bunch of tests just to assess that you have like all the last 2 months good or not. But before that, you have to look at the controls. Okay, so okay, but when is it completed? So for the type 2 report, let's say that the reliance is the green up until 31 of December. Then you could use it. But since the last 6 months, like there's no coverage, well, you can't use the type 2 report.
There's no what in the last 6 months? I don't understand.
Yeah, so there's no coverage. So let's say that ADP issues a report on June 30th, right? That means that everything beforehand they looked at it. The auditors looked at it, but after the last 6 months here, like no one's checking it, so we can't use the
Okay.
type 2 report.
But you're saying that it's useful once it's completed for the 6 months before, not after, because you didn't look at that information?
So it would be, yeah, so the first 6 months is fine, but after the 6 months, it's not good. What we would prefer is that it would be up to 31 of December.
Okay,
Is that more clear?
yeah,
Okay. So yeah, so just make sure that the timeline is good when you do use the report. There's also when, let's say, they change system, instead of before it was an old system, and then they try to, it was Oracle and now it's SAP. There's a conversion within the year. What you want to do is look at the ending balance to make sure that the two amounts are the same. Yeah. Okay, so now we're at the audit approach. So now we're assessing all the control risks. Now it's time to say, okay, which one am I going to be using to identify the risk of material misstatement at the assertion levels, given an assertion. So there's 3 things that you could do: perform test of controls, you could do substantive approach, and then combined approach. Doing one of the 3 methods is only looking at its assertion by assertion, right? Okay, so if I ask you guys, okay, so there's 2 things. There's the overall approach and there's at the assertion level. The overall approach, can I use either number 1, either number 2, or number 3, or there's something I can't use if we're looking at the overall? Yeah, David?
I'm not sure, but I like to give it a try.
Yes, sir.
For overall, I feel like we wouldn't perform test of controls. Overall, I feel like we would just be assessing the risks, and I feel like we would look into substantive or combined. And for transactional, we would then look at test of controls to see if we could rely on the controls or not.
Okay, so that's very good. So you told me that we can't be using performing test of control for the overall audit approach. Do you know why?
Because, well, the way I thought of it is because that when you're testing the controls, you just want to know if you could rely on them to do less work. So I feel like when you're looking at it overall, at the internal controls, you're just looking at if there's risks that the controls could be, that the risk could be high, basically. Like management, like tone at the top, you would more look into those things.
So okay, so wait, so you're saying that, okay, we just, looks like you're doing is just performing the test of controls. We look at management. So let's say, you mean like as a starter, you would just start with perform test of controls and then go towards more the substantive after?
Yeah, that's what I meant.
Okay. But can I just use the perform test of controls? Let's say that I feel like management has super great tone at the top. It's amazing. Like, why would I do substantive testing? It might be losing my time, no?
Repeat the question.
So let's say that management is really good for the past 10 years. You perform your test of controls, everything is fine with you. Would you still do substantive testing?
Depends if it's a fully automated system or not, I guess, or if I
Okay.
need to collect evidence, basically.
Okay. So I like your answer. So now I'll tell you real answer is that when you're doing the overall audit approach, you can only do substantive combined approach. You got it. But the reason why you can't just perform test of control is because the CAS standards, they don't allow you. They want you to do substantive as well. It's as straightforward as that. But as you're telling me with the machine, on the assertion level, yes, you could perform test of control. So for that specific machines in the AR account, we're going to be doing only test of controls because there's not that much ways to control maybe a machine that has billions of transactions. Okay, so it's important to understand that audit approach, you can do substantive and combine. In the assertion level, you could do all of these. Okay, so in the exam, don't write perform test of controls for the audit approach. That's not good. Right? Perfect. Let's go. Next one. Test of controls only, right? So David said when you have a highly automated, high volume type of system, some systems have many ways of producing documentation. There's not any really tangible things that you can do, any vouching, tracing, so it's really hard. That's why you test controls. Quite difficult to do substantive testing in a highly automated system. Risk of someone altering info and not being able to detect it, since it doesn't have the opportunity to have take control. Okay, so auditors would have to make sure whether internal controls are designed well and operating effectively. And I'd say like even like in real life, like you're always going to be testing substantively. Like just doing the controls only, it's kind of a red flag. So yes, test the controls, but always usually do a little bit substantive as well. Okay, substantive approach. So does not mean controls are bad or weak. Effective means that auditors just decide to rely on internal controls. Sorry, mean auditors just decide not to rely on internal controls. Sorry about that. So let's say I take the 10 invoices from before. Maybe the internal controls are good, but it's just that it's easier for me substantively just to look at all the invoices because there may be millions of dollars each. If internal controls are not designed effectively or not operating effectively, may not have a choice to take substantive approach. Right, so that's why we're looking at control. This beforehand, if there's a deficiency, then bang, we're going to substantive approach. Might have a situation where even if controls are operating effectively, they may still choose not to rely on internal controls and collect evidence through SA. So I just mentioned. Then you have the combined approach, right? Rely upon controls and collect audit evidence through a combination of tests and substantive tests. Yeah. Okay. So if you look at here, this is how you would go with it. So obtain documents, evaluate. So are controls effective? So if it's no, boom, you go to substantive. Otherwise, you go to combine, right? Because combine would save you more time. Then you go through each one of these, right? Design and perform test of controls. Let's say it's good. Then you continue. Let's say evaluate results, test of controls. It's not good. You see a deficiency, bang, you switch on the other side. You do substantive approach. So always before, in the middle, and then at the end, you always assess, right? How's your system? How is it going? And if it's you see any deficiency, you can't trust it, then you switch to substantive at that point. All right? Okay. So these are the tests of controls that auditor would do. And so remember at the beginning I said, okay, we'll go back to this. I'll tell you like exactly what I say during the exam. This is more for the final. Like, let's put a star here. Make inquiries of appropriate interpersonal, inspect documents, record in the report. So if they're asking you what type of test of control that you're doing, memorize these. Okay, this is the formatting. Make inquiries, inspect document. Okay, serve control related activities, we perform kind of procedures. These are the terminology that you have to be using to get your points in the final. Okay, so what you could also do is have an audit software and do some data analytics. KPMG has I think my professor named Jack Martin. He was a big data guy. Over there they would do a lot of data. So he was in the forensics. That means that he's taking a lot of data, and then he's trying to do some analytics on them to see maybe if these journal entries are not legit, they're suspicious. Right, so there's a system called ACL and IDI, and it's like Excel on steroids. And then you can also do is test the data approach. And what you would do is you would go in the the client's workplace and then test it and try to trap it, see if the system actually works or is there any deficiencies, maybe management override. So let's say you would enter a non-existent ID to the vendor master file, and system should give you an error message, right? It shouldn't be making a valid ID vendor when you're creating a fake one. Okay, so this thing, I don't know how, but I think probably it will be tested. So remember that there's two types of letter. So internal control letter. So this is communication to the audit committee. Right, so significant control deficiencies, material weakness as well. This is where you would take manager sign to tell them, okay, there's this problem, bang, 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 bang. But in the management letter, it's really just about more about giving recommendation. You see a weakness here, weakness there, and how can you change it? In Canada, you don't have to say you don't have to give the company like exactly the what they should improve on. It's more in the US, but in Canada, I think they could still purchase your engagement to have any recommendation on the internal controls. But in Canada, the auditor doesn't have to give the recommendation. So. Okay, do we have any questions for that chapter? Nope. Okay, so what time it is? Okay, so now we've assessed inherent risk, control risk. What are we going to be doing? So you'll see it's kind of a bit redundant. So we'll talk about the audit strategy, audit plan. As an auditor, what's your RAP, your risk assessment procedure? What's the audit approach that you're going to be taking? The characteristic of the audit, and then what are the design usually of the audits? Okay, so audit strategy is it's like the big picture thing. What's the scope, the timing, direction? Audit planning is really like, okay, in this area we're going to be needing more help. We're going to be testing more this account. These are the procedures I'm going. So kind of like a recipe. How am I going to test AFDA? How am I going to test existence of AR? So give the nature, extent, and timing of the audit of the specific audit procedures. Necessary in audits. All audits require procedures related to financial statement closing process and to assess progress, right? So financial statement closing process, entering transaction to a general ledger, applying a specific accounting policy, processing any journal entry adjustments. And this is really important because, as I mentioned, before in like 2008, a lot of fraud was done at the year end, right? So let's say they try to balance the account, so they would do like debit this, credit that. So that's why, as an auditor, you would really look at the journal entries at year end, and also if there's any management override, because management override rhymes with fraud. Okay. So the risk assessment procedure. So use RAP to assess specifically the likelihood of material misstatement, internal inherent risk, and control risk. Okay, so when we're looking at maybe let's say an account, what's inherent risk, what's control risk. Once we made that evaluation, you can use that assess risk, the risk of material, to the overall financial statement to help us determine our detection risks. Okay, yeah. So let's say that the risk of material misstatement is high. You do more procedures by knowing detection risk. Okay, risk is high or lower. And kind of redundant here. Further procedures. Okay, so once you perform the risk assessment, then you do further audit procedures. You have the substantive procedures, right? So now we're really looking more at the assertion level, not the overall. Procedures are designed to test for a dollar misstatement due to error or fraud that directly affect the financial statement. So when I want you to think about substantive, it has to do with testing a dollar amount. Okay, that's really the big factor of it. And substantive analytical procedures is when you're comparing two amounts, maybe from last year and this year. And substantive analytical procedures is really good because it's really like a good risk assessment, and it's really cheap because you just look at past year's information. And let's say that your store last year you had $500,000 stores. This year you have $250,000. That's a red flag maybe, and then you're going to be doing more procedures in this area to see if your benchmark changed a lot, or because maybe there was a problem there. And then test of details, substantive procedures are performed to detect a material misstatement at the assertion level, performing substantive procedures for each material class of transaction, each account balance, and each material disclosure. So test of detail is kind of right? So you have substantive, and then you have like test of detail. Test of detail is like you're really going into the nitty gritty, and you could have like transactions or balances. And then this is really when you're going to be looking at the amount. And all the time when you be doing test of details is either looking at if the invoice, the amount is good, or at the year end, the balance, is the amount the same or not the same as the ledger. Okay, so remember one of the questions that we had at the beginning, right? Test of details. Okay, so dual purpose tests. So testing the control and performing the test on the sample of transactions or account balances. Testing. Okay. So remember we had like combined testing, and now we have like dual purpose tests. So control, test of control, and then you would do the substantive here as well. Okay, so it kind of looks like the same. Can someone tell me what's the difference between combined and like dual purpose tests? Because they're kind of the same, no? Someone has an idea? It's fine if you don't get it right. Just try it. Try it, someone. No? Okay, I'll do it then. He's lucky. So when we're doing combine is really like the overall picture. So you have test of controls, then substantive, dual purpose test. Yes, you're doing control and substantive, but it's more of like on an account, a specific account on the assertion level. So let's say that we're testing the costing of inventory. We're going to be looking at the controls in place. So that's the test of control, and then we're going to be doing some substantive testing. So perform some testing to identify sample invoice. Again, invoice maybe is the amount reasonable or not. So that's why dual purpose test is assertion level. Combined approach is really the overall approach. Yeah. So if we look here, the detection risk, like what affects it. We can look at the test of controls. So let's say that test of controls are really good or bad. Like you, as an auditor, you can't do anything. It's either there or not. It's not your responsibility. It's management. And then control risk, you would look at the test of details of transactions, and that would be applied the same thing for detection risk. You could have analytical procedures and test of details balances. Just trying to get my laser off here. Okay. That's what happens when you isolate DR. Do we have any questions here? No. Okay. Okay, so risk response at the assertion level. I mentioned this before. You could perform control tests only, right? So the system is very highly automated, and that's when you would do it. Combined audit approach. So you're testing both, and then you would do substantive when either the controls are not good, or because you think that it's more cost efficient to simply do the substantive audit procedure. Now, performance, materiality, and risk assessment, planning the audit. You're going to be looking at the account. You'll be looking if there's any inherent risk, any control risk. Then you're going to be calculating the PM, performance materiality, come up with some kind of procedures that uses a percentage of it to see whether you should perform the substantive procedures and the extent of the procedures. So let's say that you have very low PM, then your extent will be much greater. Audit, when looking account by account, assess the inherent risk and control risk of every single account. Puts the assertion. Now we'll be looking at some characters of audits. Usually what happens that the nature of the audit procedure, that there's a purpose and the type. Okay, so example, what I want you to do is like, I'm going to expect this, going to observe this, and for what reason exactly am I doing it? Right? Just like in the midterm where I want you to justify what you're doing. Is this an appropriate procedure? Is it relevant? And then we want reliability, because if you look at the forms, no, inquiry is the worst one you could get, because you're not writing, you're not documenting anything. Rather get external documentation. Also the question of independence. If you have a document from some employee inside, it's not as much valuable as from someone from outside. Or what auditor is performing themselves extraction. This is the best that you can do is not trust yourself. Here's a good, do your test yourself and you will get more assurance. And then relative costs, right? Working 60 hours a week at a big four, they're paying you, maybe not overtime, but they still have a cost and they want to get the most out of you and you want to get the most out of your mandate. So you're not going to be doing a lot of testing because you have to do a lot of testing, but you want to do a lot of testing because you're going to be selecting the ones that are the best, maybe in time, but in cost. So analytical procedures, that's what I mentioned. It's the lowest cost, and you just compare from last year, so it could be done very quick. Then test of controls, again, we want to see the test of controls. If they're higher up, that'll lead us to our substantive, because our substantive, this is one that takes the most time and effort. Okay, so usage of ADA and other technologies, so this could be at the planning stage of the audit. Right, we're just trying to see like, where should we be spending most of our time, particular division are more at risk, right? Let's say we're in the mining industry, maybe inventory is at risk, so that's where we'd be focusing more. And then what we also have is testing automated controls. See, we're trying to see if the system itself, let's say they have invoices, are they actually putting the invoice of 92 days in the right bucket, or they're putting in the 0 to 60 days. So these are tests that you could be doing with the automated controls. Okay, so timing of the audit tests for big clients, usually it's maybe each quarter, get information from them, talk with them. Don't wait at the year end because you'll have too much to do. Usually year end is mostly for small clients. Because the mandate could be smaller, or just because like they don't have that much data, and there's always continuous monitoring. Has to be done by management, and you review types of risk on regular basis, certain types of transaction. So this is management has to be doing, that's their job, monitoring. We'll see for the final, there's really the causal framework. There's a part where it's really up to management to do it. Then you have continuous auditing. That's you guys done by the external auditors. Okay. I'll let you guys read this role for testing example. So this is just like more of during the interim period, like how you're trying to complete the last month steps of the audit program. Again, test of controls and test of details of transactions, substantive analytical procedures, and test of detailed balances. Right, so you would start with the test of control first, then you would do the substantive analytical procedures, and then lastly you would do test of detailed balances, because this takes the most time. Okay, do we have any questions on that? We're good? Is it really quiet on Sunday morning, huh? Okay. So I think there's going to be a lot of questions on audit sampling and concept, maybe like half of it. When I did it, it's weird because, well, I talked with your professor, Ted Nowak, and he said that he's the one doing for the quiz, for the quiz number 2. So I don't know what he's going to come up with. But when I did it, there was a lot of, my friend had a lot of questions on like controls, substantive approach, yada yada. And I had in my exam, in my quiz, I had a lot of audit sampling concepts. So let's say like understand both, try to understand maybe 50-50 each, but always try to get an understanding of it for the quiz, because it could come up really fast. Okay, so audit sampling concepts. So sampling, if we look at the CAS standards 530, it doesn't really say how an auditor has to do sampling. There's a lot of leeway that you could have. So there's 3 methods that you could be using. One, take everything, 100% of the population. Number 2, specific items. So you could say, oh, well, there's like 10 invoices here, 9 invoices out of them are like more than $1 million. The other one's like $10,000 only. So I'll only be using 9 of the 10 invoices. Then you have audit sampling, which is what we're usually doing. Remember, we have like materiality, we're placing it at maybe like 20%. That means that we're taking all the work above it. So we're taking 80%, we're not taking 100%. We're just trying to extract this to represent all of population, because we don't have time to do everything. Okay. So population is I'm giving you guys a comp 215 PTDSD, but I'm sorry about that. This is how I'm gonna have to do it. So population is really just what's, if you're looking at invoices more than $500, then it's all the invoices above $500. So everything that's in your hands, your testing. And so how am I going to identify specific part of my population? Representative sampling, whatever characteristic that identified about the sample, are they the same characteristic that are reflected in the entire population, right? So that's what you're trying to do with representative sampling. The more accurate you are is because your sample represents the population. Then we'll see sampling error, like you'll see what that is. Right, sampling risk. Okay, so this is what you don't want to be doing. Do not select representative sample. You're drawing incorrect conclusion. Okay, like let's say you're trying to. Okay, I won't give an example, but I guess we much know what this is. And then internal control perspective, because the risk is that we see internal control working effectively because of sample. Okay, so as an auditor, this is what you don't want to be doing. Is that, let's say you're looking at internal controls, you're like, oh yeah, this is working, control risk is low, and then at the end of the day, it turns out that what you tested was like maybe only the good part of the system, and you thought that this was good for everything, but actually everything else is it's not operating effectively. So that's the worst mistake that you could do. A better mistake is that you draw a conclusion that says that the system is not working adequately, but it's actually working adequately, right? You will get a lot less liability because of that statement. Non-sampling risk it has nothing to do with the representative nature of the sample, right? It's when you're making an error or something, somehow you have a bias, and that's the reason why it's called a non-sampling risk, right? So remember, we had a question on that at the beginning, right? It could be because auditor is not properly supervised, doesn't have enough experience, made a mistake, or thought something was right when it was not. Okay, so there's actually ways that you could do sampling risk and non-sampling risk. Sampling risk is that you adjust the sample size, you increase the sample size, get more variability, yeah, that's the word. And then you would use an appropriate method of selecting sample items in the population, right? We have a lot of sampling methods. And then you have non-sampling risk. Okay, I had that in my quiz. It was like, what are the non-sampling risks you could do to reduce, whatever. Well, you could add additional reviewers, so you get more people on the team, or you get better monitoring by the experience and the staff. So instead of getting just an associate, you get a partner to review everything. Okay, so what are the 3 key items when performing sampling? 3 steps: planning, you plan the sample size, determine the sample size, So, example, I decide 10 items are going to be needed to send out my AR confirmation, then performance. Select sample, perform a test. You're going to select which customer I'm going to send the confirmation. And so let's say you have 10 here. You're not going to be doing all 10, maybe just 8 of them. Evaluate the result and conclude on acceptability of population tested. Right, so this is when you would extract based on your data, and you would give like a qualified and qualified opinion. Then you say, well, I am 95% confident that the error rate is between 1 and 2% or lower. Right, so when you have non-sampling, non-probabilistic, you can't be doing this. It's really just when it's probabilistic, then you could extract this information. Right, so comparison, probabilistic and non-probabilistic, okay, it's pretty much the same thing between both. It's interchangeable. Probabilistic, each population item has a probability of being selected. And so let's say I have let's say I have a hat. I put 10 name tags. Well, each one of them has one chance out of 10 to get selected, right? So that's probabilistic. Non-probabilistic is no idea, selecting items based strictly on professional judgment. So you don't have like a methodology. We're taking this because of that, and that's the reason why we're doing it. It's not because it's bad, it's not probabilistic, right? Remember that CAS says that you could, you have a lot of like, based on the auditor's judgment, you could do whatever you want. It's just that in this case, it's not probabilistic. With statistical sampling, probabilistic, one can plan and measure what the sampling risk is, the level of confidence, error, right? Comp to 15, all these p-value, whatever, right? So that's your level of confidence. And statistical can be seen as better because giving you more assurance by letting auditor use the measurement of sampling risk and giving him the level of confidence as well, right? So there's a level of confidence that's what we prefer. But sometimes you're not going to be doing probabilistic, but that's a side effect is that you don't have that confidence level. With not statistical, cannot measure the sampling risk, Yeah, I wrote it twice because I want you guys to remember that. No confidence level and no margin of error. Okay, statistical sampling, random sample. Oh, sorry, Patrick, I didn't see your hand there. It's been there for a long time, huh?
Yeah, it was kind of from the beginning. I didn't really understand the difference between specific items and audit sampling.
Okay, so let me. Yeah, next time if I skip you guys, just so you can interrupt me online. All right.
I saw you're on a roll there, so I don't want to interrupt.
All right, thanks. Which slide? Number what?
I don't remember the number of the slide, but it was just I don't understand the difference between specific items and audit sampling. It was one of the first ones. I don't remember which one.
Okay, maybe like specific items is like, let's say you have 10 invoices and 9 out of 10 are like more than $1 million, and one that's $10. We're gonna you take specific items like the 9. Okay. Audit sampling is really like everyone has a chance of being selected.
So what's the difference between audit sampling and like non-probabilistic or a probabilistic?
You mean audit sampling and probabilistic?
Yeah, like audit sampling would be probabilistic, right? And then specific items would be non-probabilistic, right?
Yeah.
So, but like, what's the difference? Are they just the same thing? Like,
well, the difference is that when you're talking about like specific items that you like, let's say the 9 items that so there's 10 invoices, there's 9 invoices that are more than $1 million. The one that's $10, he has like no chance of being selected. Okay, so that's not probabilistic. In audit sampling, everyone has a chance of being selected equivalently. Like everyone has 10% chance of being selected. When you're taking specific, you're like disregarding like maybe 3/4 of the population because you're like, I don't want to choose this. So it's not probabilistic because you're saying I'm taking only this one because I feel like that's the best judgment for this sample.
okay, all right, I see.
Does that help?
Yeah, thank you so much.
So right, so sampling risk, audit sampling is really everyone has a chance of being selected. When you're doing not when it's specifically items, it's really when it's not everyone that has the same chance of being selected. Okay. So I was here, yeah. Here. Okay, yeah, so yeah, exactly here. It's statistical sampling. Just by the way, on your screen, do you guys see the? I have my like all the people's name. You guys don't see it, right? You can just see my slides.
Yeah, we just
Okay, perfect. Sounds good. All right, thank you. So statistical sampling is there's three, right? So there's random sampling, systematic selection, and MUS. So random sampling, every possible combination of population has an equal chance of being selected. Systematic selection is just, okay, so let's say you have invoices from 652 to 3151. You want to come up with a methodology to not just say, oh, well, I'm going to be taking the first 125 invoices that I see, right? So from 652 to maybe 770 something. So this is what you do. You take the difference between both. 3151 minus 652 equals 2500. So that's the whole difference. Then you would divide by how many sample invoices that you want. So let's say 125. So that gives you 20. So for each 20, you would choose one invoice. Okay. And for the first number, you could say like I'm choosing from 1 to 19. Let's say 6. And then you would do 652 plus 6, so 658. And then you would do plus 20, plus 20, plus 20, plus 20, plus 20. And then that's how you would get a systematic selection, right? So you're not taking the first 125, but you're trying to get like spread all over the invoices. Are we good with that? Do we have any questions? Perfect. Let's move on. Okay, so MUS. So let's say I have 10 invoices. And I do random sampling. All these invoices have one chance out of 10 of being selected. But let's say I have one out of these 10 invoices, one invoice that's $1 million, and all the other invoices are $10. Right. So if we're going to be doing random sampling, it's not going to be very like representative of like our population. Maybe that $1 million that you really want to double check. So what MUS does is that it takes the weighting based on the dollar amount that you have. So really the key takeaway here is that sample of larger monetary units will provide us more evidence than a sample of smaller monetary units. And when we're going to be doing, you'll see that if the invoice is high, it's more chances of being selected. And that's what you want, right? Because when an invoice is high in dollar amount, you want to be double checking it. Okay. Is there any questions for that? No. Okay. Straightforward. Okay, so there's not statistical sampling. So items selected on judgment. Okay, so you can say like, oh well, I have 10 customers. I'll just be double checking the invoices of 3 customers because they had a bad history. They're not paying me for the past 5 years, so I'm going to be just selecting these 3. All the 7 customers I have, they should be fine. I'm going to put them in my population or something like that. Then you have a block sample selection, and this is when you're trying to test cutoff. It's really, you want to make sure that doing at the end of January 31, the invoice is for the right year end and not the other year end. So you're going to be cutting it, taking a couple from the 2022 and then a couple from year 2023, right? So a little bit of those, and that's not statistical sampling because you're just saying, well, I just want these ones. Okay. Haphazard sample selection. So thinking, yeah. Okay, so haphazard sample selection is when there's a bias involved. Yeah, that's why you have to remember unintentional bias that we're applying. So you're taking whatever comes in your mind first, and then you're doing it. So let's say that you think you're doing random sampling, but then you're taking like the 10 last invoices, but it turns out that every year the biggest client reports the last one, right? So that's why you want to make sure that you have like really a timeline, not timeline, methodology to say, well, I'm going to be maybe picking this one and then that one, that one. So let's say also, okay, so let's say there's two, there's two students, okay? You ask them, perform me heads or tail tests, right? Heads or tails like 100 times. One student does it actually, throws the penny, whatever. The other one doesn't want to do his homework, and then he just writes heads, tails, tails, heads, tails, heads, tails, right? So it could be seen that maybe from one student, the one that actually did it, there's heads, 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 maybe like 6 times, and then there's tails once, because that can actually occur. But if you look at the other student that didn't do it, maybe he puts like heads, tails, heads, heads, tails, tails. Okay, so that's the unintentional bias that that person has, right? So let's say you're doing an exam and then you're doing comp through 8, you're not too sure of the answer, then you're like C, C, and then the third one looks like C, but you're like, you can't have 3 C's at the same time. So you're gonna put B. Okay, so that's the unintentional bias that you have when you're doing haphazard sample selection. And it's, for me, I feel like it's more like a side effect of not doing the right way. You get haphazard. It's not like, oh, I'm gonna do haphazard. It's the consequence of not having like proper procedures. Okay, are we good with that? I have questions, because usually this is a very confusing one, haphazard. And the solution is really just to use a random number generator, and that will stop you from making a mistake. Here we're good? Yeah, okay. Then we have stratified. This is when you're trying to divide the elements of the population into subpopulation. Okay, let's say I have, I'm trying to extract information on the Canadian population. So I take maybe 2 people from BC and then 3 people from Manitoba, right? I'm not just taking, I'm not pulling everyone in the same category and say, oh, I'll be taking 10 people, and it turns out like half of them are from Quebec. I'm just going to separate everything like from provinces. That province, that province, that province. Maybe this province has more population, so I'm going to be taking a little bit more people, but just trying to divide all the population into subpopulation, and then that's how I would be taking my whole population, my sample, sorry. Okay. Do we have any questions here? Nope. Okay. Yeah, sometimes I don't know if in my head, if I explain it really well or just I'm talking way too much, but thank you, Patrick. Let's go. Okay, comparison. Sampling for the test of control and substantive test of detail. Not that much in terms of methodology. Okay, so I remember I had one of my quiz, like, what was the attribute? Well, in these answers, what's the attribute sampling? I was like, what the heck is this question? Well, attribute sampling is, am I trying to ask a yes or no question? Okay, it's not about the dollar amount. It's really about yes or no, or like other qualitative answers. Okay, is that control operating effectively? Am I trying to ask a how much question? Then that's your test of detail, and that's variable sampling. Okay, so guys, if you see the quiz of variable sampling, and you're like, what the heck is this? Think of test of details, dollar amount, to quantify an error. So doing substantive test, you're testing the dollar correctness, you will have a dollar impact. Okay, so if I'm testing inventory and I try to identify the dollar amount of my error, I need to answer how much inventory is misstated. That's your test of detail, which is variable sampling. Okay, so the answer, which part you want me to repeat for slide or slide 49?
No, it's from the part where you were saying like what the question on your quiz was.
Okay, so on my quiz, it was saying like out of these answers, which one is an attribute sampling answer, whatever. So when you're looking at attribute sampling, we're testing the controls, and the answer is qualitative, right? So it's yes or no, but it's not a number. Okay, so let's say I'm asking the question: is that control operating effectively? That's the attribute sampling. You're testing the controls, it's attribute sampling. So the answer would be yes. It's not 26, it's not a number. However, if you're trying to ask how much, is this amount right or not, you're doing substantive testing, then you're testing the dollar correctness. So then we have a dollar impact. That's variable sampling. Okay, so variable sampling, it's dollar amount. Is that straightforward? Was I freezing there or no? It's good.
Yeah, no, a little bit, but I'm also anyway. So it's attributed and substantive or variable. And then one of them is the qualitative and the other one is the dollar amount.
Yeah, exactly. So for a quiz, just remember both, like test of details, variable sampling, and dollar amount, and then you should pretty much be fine for that. Okay. Okay, so we'll go over again a little bit here. Test of controls, just trying to answer a question, yes or no question using attribute sampling. If the control is working, and normally the sample size is less. Substantive testing is how much question. Okay, dollar amount here, guys, dollar, using variable sampling. And since you need way more precision, you need more of a sample size. Okay, because we're testing the dollar amount. Okay, tolerable misstatement. Does it ring a bell from the quiz that we did at the beginning? Application of PM to a particular sampling procedure. How much you're willing to accept in terms of an error rate. Okay, we know we might select a sample and find errors, but just because we have an error does not mean we conclude something is missing, right? Because can we get 100% assurance? No. There's always that percentage of error that we're going to be accepting because it might be not material or something like that. So if you look here, what you have to remember is that depending on the result, even if you might have found errors, if it's below our TM, so accept the result and did not identify any material risk of material misstatement. So you would look at the TM, okay? And then there's the acceptable risk of incorrect acceptance. This is more when you're projecting onto your real population. So you're like taking your misstatement and then you're trying to extract that onto your population. That's the area. Okay. So if you look here, so the TM is so the TM, the toggle misstatement error. Here we don't have an example, but look at here, okay? Your point of estimate of misstatement. Let's say that your toggle misstatement is so let's say we add all these. I'm not too sure. Let's say it's $200,000. Your toggle misstatement, let's say in the question it tells you it's like 10%. Okay, based on the question. Well, that would be like $20,000. Then your point estimate would be 6.5K, which is less than the amount. So then it's fine. That's how you would look at it. Okay, so going back here, depending on the result, even if you might have found errors, it's below our TM and still we would accept this, even if this mistake, but it's not material enough. And the toggle misstatement is the application of PM of a particular sampling procedure. Okay, so PM, performance materiality. Okay. What do we do if it's over the so if it's over the TM, in that case, well, it's material. You're gonna maybe talk with management and say like, why is an error here? It's above your threshold, so you have to do more procedures, more testing. Let's say this, actually, I don't know, this is the wrong invoice, this is the right invoice. And then after that, it's below your materiality, then it's fine. But I would say like just inquire management, talk with them, see if you could resolve that, or if if it's above your TM, and then they're like, get out of my office, I don't want to talk to you, you auditor, then the opinion that you're going to give, it's not going to be favorable to them. That's how you would see it, right, Patrick? All right. The audit, data analytics, risk sampling. And so you want a lot of data, but you can't just say like, oh, I'll just take a bunch of data that the client sent to me through Excel. No, you have to go test it, look at the controls, take additional steps to make sure that we can rely on the raw data we are getting and perform statistical sampling. Okay, so we can go test the controls. Okay, any questions for that? We move on to the next chapter, audit of cash and cash equivalents. Yeah, what time is it? We're on time. Okay, 11:23. Okay, I can talk a lot. So audit of cash and cash equivalents, chapter 16. So what's the importance of petty cash? Right now, it's not much of a risky account as before because everything is more like on Visa, whatever, on transaction ledgers than cash. But a lot of companies still have cash, and we have to be looking out for it. From an auditing perspective, one of the most important thing that when we're thinking about petty cash is that cash balance is immaterial. You want to be looking at all the transactions, right? Because at the end you could have like balance at the beginning of the year $2, at the end $2, but there could be billions of dollars going in and out. So not just the balance, like we did before looking at the balance, but we have to look at the transaction, which is the most important for cash. On transaction, not ending balance, For balance sheet account, normally look at the ending balance. And the good thing about cash is that we could do a reconciliation to really find out the error, right? Before, if there was a mistake or something, we couldn't really do much about it, maybe adjust our detection risk, but here we have the dollar amount that we're missing. Okay, identify inherent risk factor and determine significant risk. Right, so cash, it's always susceptible to theft. So for that reason, we're always going to be on the lookout for it as automatically risky. Key controls and access control risk. Bank rec is as important process that typically is assigned to someone who is independent, have additional employees. Okay, so there's two things that you could do is that either you give the bank rec to an independent party, make sure that within the company there's not like people colluding, because it is a cash account. It is easy to go in and go out. And number two is you could have more bank recs, right? So let's say you do one bank rec per year, and then you find out this error, then you're like, holy shit, I'm gonna have to go 12 months of transaction. Well, it's better if you do it maybe each month, where you can say, oh, well, last month everything's good. So if this month there's a mistake, well, it's only within the month. Okay, then there's electronic cash transactions. Should be less risky to have wire transfer, right? Because it's electronic. So it should be it's easy, harder to like just steal and then cover your tracks. All right, so designing substantive tests. So auditors design substantive procedures to address the following misstatements that are common in cash balance risk. So I think your slides are a bit different. I'll upload the new slides. But what you have to retain from this is that not all cash accounts are on the general ledger. So we're having auditing procedures to make sure that that there's not a completeness issue, that there's not just an amount somewhere that we don't know. So we have to go test that, see if there's missing an amount. There could be cash is missing due to errors in the bank rec. That's why we're going to be doing the reperformance or whatever, doing the bank rec. And then cash is missing due to improper cutoff. Right, so sometimes the checks could take like maybe 2 or 3 days in the mail. That's why there's an arbitrage period that could lead us into indication that there's a mistake. But that's why we have to go check and then ask for the bank if maybe there's a document that's not there for now, but it will be after 2 or 3 days. Substantive analytical procedures, which usually compare the ending balance with past months and period. There's a difference of 10K. We'll try and reconcile the whole thing. So that's why analytical procedure is really good. You can do analytical procedure on anything, and then maybe there's a big difference, or kind of give you a red flag, and then that's like your go time on that specific account. Okay, so this is more for the bank reconciliation, like how to get audit. What's your audit procedures? We'll do this after again. I'll show you after. But when you're doing a bank rec, you have to identify, is it an adjustment to be made on the bank side or the book side? And then adjustment to the bank equals the book amount is correct and the bank needs to be adjusted, and the other way around, adjustment to the book side, the bank side is corrected and the book needs to be adjusted. Okay, now these 2 terms that you have to know for your quiz, kiting and lapping. You could come up at the final 2 as a more like a 1-sentence kind of thing. But for your quiz, kiting is when you're taking advantage of like delayed transfer from one bank account to the other. So let's say that you have 2 bank accounts. Then you're saying, oh, well, I'm going to just transfer all the money into the other one. It might take 1 or 2 days, but during that time, maybe the other bank said, oh, well, actually, you're a good client, so we're going to grant you a balance here. And then you have like 30,000 sitting on both, but you actually had just 30,000 at the beginning. So that's where kiting comes in. And there was like a Netflix movie, like Tracing Anna or something, like this rich Duchess or whatever. Like I think that's what she was doing. She was trying to kite the money from one account because she was like, well, I'm rich, so the bank is going to give me the money and yada yada, and that's what happened. And kiting. Then there's lapping. Lapping is really just when the person handles the cash and the journal entry. What you want to do is have segregation of duties, because if the same person is doing the cash and the journal entries, it might be putting as AR bad debt expense, but then taking all the money and putting in their pocket. So that's what you have to watch out for. Okay, we're done. We're gonna go to the exercises, the theory questions that we had from the beginning. I'll show you the answers. Hopefully you have a better understanding now. Hey, all right, this is gonna be fun, guys. Good slide. Okay, so assume that you're using statistical sampling for your test of controls. If the test of controls results that the sample deviation rate is below the tolerable, wait, is that the first question? Yeah, it's below the sample deviation rate, then what happens, right? So Patrick, you asked me the question before, if it's above TM or if it's below TM. So what are we thinking here? D, both A and C. Okay, D, it looks like everyone has D. David, at the beginning, what did you say? Remind me?
I said C, but I changed it.
Okay. So, so the control is effective, so we accept. And since it's below, we could rely on it, right? So answer is both A and C. Perfect, guys. Excellent. So next question. Which of the following situations are you more likely to use non-statistical sampling than statistical sampling? There's specific risk factors. There's a lot of variability in the values of the items in the population. Okay, so we're saying C, all of the above. C. Do we have another answer? Sure. A or C. Patrick says A or C. David says C. The answer is, oh, yeah. So it's actually A. Because remember, like if there's a lot of variability in the values of the items of the population, like let's say one of the invoices is really big, then maybe in that case you'll be using MUS, right? MUS is still statistical sampling. But when there's like specific risk factors, like let's say your client, like I said before, 3 of them out of the 10 didn't pay for the past 5 years. Maybe you're going to take, oh, well, I'm just going to use non-statistical sampling in this case, right? Because they're not paying me. That's a specific risk factor, so I'm going to be checking them out. But variability, like if like an invoice is big, then the other one, like usually you could do MUS. Okay. Is that good, everyone? Yeah. Okay. So the next one. What is the objective of substantive tests of details? Or did you hear, everyone? Can you guys still hear me, or am I lagging? Okay, I'm still there. Okay, B. Anyone has other thoughts than B? B, right? So Laurence, I think you said another answer, right, at the beginning? Yeah. Yes. So I think it's like to obtain effectiveness of internal controls, right? So substantive testing, we're taking the dollar amount, right? So in this case, it would be the year balance. If we're testing the controls, then that's for the effectiveness of internal controls. So yeah, the answer is B. Okay, which of the following is a tolerable statement that you would use in your substantive test of details? Which one, guys? Which one? Patrick. Yes, sir. Hey. There you go. There you go. PM. That's how you would use it. Okay, so detection risk is. Sounds a bit hard. A. I draw on this. Right? Remember that. No, the picture that we saw was like AR. No, sorry. Sorry. DR was equal to like, what is it? AR, yeah. AR divided by, what is it? Inherent risk times control risk, right? Okay. Yeah, so now says that AR. So everyone thinks it's A. Risk of an incorrect acceptance based on detailed tests times analytical procedure risk. Yeah, so the wording is kind of confusing. Right, so detailed tests and analytical procedure risk. It's more about these, right? Talking about this one and analytical procedure risk. Okay, like guys, don't forget this. There's this too, this AR. Is that mentioned here? Okay, so everyone thinks it's R. No, it's none of the above. Okay. The only answer that we would take would be maybe this risk of material misstatement and acceptable audit risk, but this is not audit risk. This is acceptable audit risk. If it was risk of material misstatement times AR, then we would take it. But these are not. Yeah, these are not. We still have to talk about audit risk based on detailed tests and analytical procedure risk. So it would be more of the E here. Okay. Yeah, but honestly, like this is very confusing because right now, like I talked to like professors and like they're not mentioning acceptable audit risk anymore. Like they took that out. So like I think this question was like from the old book. So don't worry too much about it. If you don't understand, just skip it. Yeah, so it would be AR divided by the risk of material misstatement, David. Okay. I'm just like honestly, like don't think too much about it. It's kind of confusing. Maybe I'll come back to it if I have a better explanation. But like for now, just don't worry about it. It'll just confuse more. Okay. If you're testing the internal control, the control risk will be determined after you complete the testing, was determined before you started your testing, and can be high, medium, or low. None of the above. So what are we feeling here? You want to say B. David wants to say B. Patrick says A. Okay, you guys are gonna have to fight for it, Patrick and David. Okay, so Laurent says A as well. Okay, so control, internal control. So the answer is B. So David, you're right, and the reason is that it starts even before you're testing, right? So you come there, look at the internal control risk. Maybe you're looking at just management. Okay, so before even touching it, the controls, you're looking at management. Maybe if the foundation is weak, then everything else is weak, right? Is that clear for you guys, for Patrick and Lawrence? You guys understand more? Yeah, okay, perfect. Okay, which description best illustrates non-sampling risk? Using a sample that is too large and therefore conducting more work than necessary. Using a sample and failing to recognize errors or deviations in the documents examined. Using a sample that does not represent the population, or none of the above. What are we thinking here? D. Okay, the last thing's maybe D. B. Christina says B. Gabriel says B. A lot of B. David says C. Wants to be different, right? So he says C. So David, okay, so David, what's random sampling? Tell me. This random sampling risk. Like look in the sides. If you have the sides there, what's random sampling risk? Okay,
Random
okay.
sampling risk. I don't know if the word random changes anything, but I would say sampling risk is written here that it's not selecting the representative sample and drawing
Exactly.
incorrect conclusions.
Exactly, sampling risk. But here we're asking non-sampling risk.
Oh, okay, so nothing to do with the representative nature of the sample.
Right? So before I did talk a little bit about deviation, how you're deviating for what is actually planned. And here you're failing to recognize errors, right? So let's say I'm the auditor, and then I'm saying, oh, I'll take the 10 last invoices, but it turns out that the 10 last invoices usually it's the biggest client that reports to us at that time. So that's that's kind of like you're not recognizing that error. So that's why it would be using a sample and failing to recognize errors or deviations in the documents examined. Okay, so C would be for sampling risk. B would be for non-sampling risk. All right. All
Thank
good.
you. Yep.
Perfect. Okay, last question. 1 minute to the quiz before Ted Noah comes here and whips out the copy of your hands. So we're gonna go quick. You perform a test of controls for the prepaid expenses. All necessary controls were in place and they were all effective. what can you conclude based on that? D. Okay, David says D. Hasana says D. What do you guys think it's D?
Well, I was gonna say it's the type of account is a prepaid expense. So even if the controls are good, then there might be maybe last minute adjustments by management or some expense that could the nature of the account basically.
Yeah, exactly. So you can never guarantee it, and usually there could be some management overrides, something like that. So you can't say for sure. And it says about effectiveness. Does it say about operating effectively? Not really. So that's why it would be neither A or B. Okay. Okay. So we'll take a 5-minute break. We'll come back. We'll do the questions from the documents I sent you, and then that will be doing the quantitative exercises after that. So just take a 5-minute until 48, and then everyone come back. Right? Okay. But okay. Is everyone there? You guys hear me? You see my screen? All right, David gave me a thumbs up. Thank you. Okay, I want you guys to participate. I know it'll take a lot because we're Sunday morning, but okay, we'll start with the theory. So test of control, making sure that the client has controls in place to prevent or detect errors, test whatever the client is doing, and say they're putting steps in place to prevent or detect material misstatements. Right, we want to rely on those controls, so we got to test for those specific controls. Right, so we're just looking at here the controls, testing them. Is the system effective? Designed effectively, and is it operating effectively? Is there any things to prevent or detect any errors? Right, we want to test this because it'll save us a lot of time doing the substantive testing if we assess that the control risk is low. But if we have to do it, we're going to be doing the substantive testing, which is maybe testing the FDA, and we're doing analytical procedures, watching a combination of many, and then we're testing the dollar amount. That's really the important thing here. Okay. So now let's go to the questions. Okay, so control, just let me know. So what was the question? Yeah. Each history represents a control and a way to test the control. About the efficiencies of the test of controls. So let me know if the control is good or not. Okay. So control, prior to the sales staff processing it in order, the customer's credit must be reviewed by a supervisor who completes and signs a customer credit review form. Right. So you're an employee, you're doing what you have to do, but then you have to get it reviewed by a supervisor who signs it. Okay, who signs the approval that the customer credit review is good. Now, what you're testing is that you're selecting a sample of sales order. That's you, the auditor. Select a sample of sales order and review payments supporting documents to determine if the customers ended up paying for the order. So is the procedure good or not? Right? That's control, and then the control. Is the control good or not, guys? Yeah, not enough. David says not enough. Why do you think it's not enough, David?
Because it says the supervisor completes and signs the forms. So we would want to make sure that each form is signed by the supervisor.
Exactly. So here the control is, you have to make sure that you know the control, because in this case it's who completes and signs. It's the manager. We want to check if it's signed or not. But you as an auditor, you're just looking at if they're being paid or not. So you're assuming that if they're paid, it means that the person has a good credit. And if they have a good credit, it was approved by the supervisor. But that's not good. You want to check for the actual control. So yes, the procedure is good, but what you want to do, the procedure is good, but it doesn't review the customer's credit. To test this control, we should take a sample order and make sure that the credit review form were signed off by a supervisor. So really look at all the invoices and check if there was a signature on it, and not just if the amount was paid or not. Okay. Now question number 2. Control. At the end of each month, the accounts receivable AR supervisor prepared the AR list. The list is reviewed by the AR manager, who must sign it off. Right? Test of control. Inquire of the AR supervisor how the age AR list is used to calculate the AFDA. So what's the control here, everyone? Guys, don't be shy. You can make mistakes, no problem. Just some participation here. Okay, so it looks like I'm gonna have to answer myself in the question. So here, yeah. So did someone say something in the chat? Yeah, so not good enough, right? So this is the same thing as the last problem where we're looking at if it's being reviewed or not assigned by the AR manager. No, if we're going to inquire them on how it's calculated, there's no coherence between both, right? So sufficient appropriate audit evidence, this is not appropriate. What we want to do is, right, so what we will do is like the same thing as before, just look at if it's a review and if there's a signature on it. Okay. Control. At the end of each day, warehouse staff submit all unfulfilled customer orders to their supervisor. Only the supervisor is authorized to cancel unfulfilled customer orders in the company's financial system. Test of control. Request warehouse staff to log into the financial system and attempt to cancel an unfulfilled customer order. Good. All right. So David says, good. Guys, if you want to just answer the chat, that's fine. You don't have to talk. Okay. And it's Sunday morning. Voice might not be the best because you partied too much yesterday. Just write in the chat, and that'll be enough for me. So yeah, it is good. Right. So before, when I was talking about IT in general, there's like two things that you want to look. One is super user access. No, does everyone have access to the computer? And number two, like how is it created? Is it a software or is it like QuickBooks that there's not that much things that you could do to alter it? In this case, we're trying to see if everyone has access to it, and that's what we're testing. So that's good, and that's the employee on the employee side. Yes. Okay. I'll also provide the correction of this, so don't have to worry if you don't have too much time to write this. Okay. Control. Employee responsible for shipping are separate from the employees responsible for accepting and processing the sales orders. Test of control. Obtain HR files of employees who work in the shipping department and review whether they ever worked in the sales orders department. Review whether employees working in the sales order department ever worked in the shipping department. Is that good enough? Not good, right? Not good. Yeah, so David, right on point. And here what we're testing is that if the employee, the shipping is separate from the employee responsible for accepting, is there an access for them to do it? And what we're testing is, since they're working in one, well, they can't have access to the other one. But that's not true. Maybe both of them work in both places. So that's why this is not good enough. What we want to do is just like last time, check if they have super access. If they still they used to work in that department, do they still have access in the new department? Okay, HR document just says that they shouldn't be working in one department, doesn't mean they aren't, right? You can go fool around in the other department if you want, doesn't mean anything. If on paper it says that you work in one department, right? Question: were you able to keep access, login info for them in the non-authorized department, and does it reflect access to only the new department? Okay, now next one. Control. The quantities on the order delivery notes are checked by the warehouse manager against the actual quantities prior to the shipment. Manager stamps good to go on the delivery note for each. For example, of orders that were shipped, obtain delivery notes and check if they were stamped. Is that good or not good? Okay, checked by the warehouse manager. Good. So yeah, so the control is that they have like the stamp, they're good to go, they're hot to go, like we like to say at GMCC, hot to go. And then we're looking at if your test of control as the auditor, if there's a sample, there's the stamp on it. So that's directly linked together. So it's a good measure. So just look at if it's linked or not. If it is, then it's good. The control. All blank checks are stored and locked in a safe. Only the CFO and the finance manager know the code to the safe. Test of control, confirm with the CFO and the finance manager that they always keep the safe locked and that the code to the safe contains at least 6 numbers. Okay, David says not good enough. Not good. Okay. Not good. All right, perfect. So yeah, it's not good enough because look, there's 2 controls in place. All blank checks are stored in the lock safe. That's number 1. Number 2, only the CFO and the finance manager know the codes to the safe. Okay. So the issue here is that we're not doing enough, right? So what we should be doing is that we should talk to management and say, no, where are the blank checks? Maybe if you have time, you go there, you look in the safe, are they actually there? It doesn't mention like the test of control, like where the heck are the blank checks, right? Number 2, we're not testing the second one, which is only the CFO manager, the CFO and the finance manager know the code to the safe. What you want to do is ask them, no, are they the only one that have access to it? Is there anyone else that has access to it? And they're the CFO and the finance manager, so they should know. They're liable for like monitoring all their internal processes, so they have to tell you the truth. Okay, are we good for that one? Yeah. So inquire where the blank checks are. Where are they storing the blank checks? Number 2, not testing the second control. Inquire whether you share the code with anyone else. Okay, based upon the case facts, indicate whether the type of control risk is pervasive. Okay, guys, it's pervasive and not persuasive. Okay, I did that mistake before. Don't do it like I did. It's pervasive or a risk at the assertion level, and the impact on the control risk, whether it goes up or down. Okay. Oh yeah. So I just want to. You don't have to know this, but like maybe the core concept of it, like clean is unqualified audit opinion. FS is fairly presented in all material respect. So you can see that here, like when we're talking about qualified opinion, that's not good because the FS are fairly presented except for the except of yada yada, fairly presented except for yada yada, right? So in this case, no, I don't have my cursor. In this case here, you would maybe say like, okay, you go over to management, talk to them, see like what's going on. Okay. If it's pervasive, it's big, then you have like adverse opinion, like FS do not present fairly. You see how like aggressive this looks like. We do not express an opinion. Like, so that's pervasive compared to like at the assertion level. That's why it's so important. But just understand what's like unmodified and like what's modified. I think that'll be good enough for you guys. You'll see more at this in Acco 465. All right, let's go. So there have been a number of discrepancies in the company's cash balance. One of the managers suspects that Dominic, his CFO's cousin, may be removing cash on Friday afternoon. The manager, however, is afraid of getting in trouble with the CFO if she confronts Dominic about this issue. Is this pervasive or is it at the assertion level? Pervasive, right? Okay, so I think it's pretty straightforward. When we're talking about the C-suite, right? CFO, CEO, management, if they have a lot of like impact on the situation, it means that they're touching many accounts, and that's pervasive. Right? So that will increase or decrease the risk, the control risk. Increase. Yeah, increase the control risk. Okay. The company's controller is a very detailed and rules-oriented individual. Last month, she fired an employee from the accounting department who did not complete the bank rec on time. Is it pervasive or is it at the assertion level? Okay, pervasive. The company controls everything. Right? Because we're talking about this company's controller. Controller have access to many accounts, and here we're talking about the accounting department. Even if it's the bank rec, right? But we're starting from on top, which is, we're starting on top, which is the controller, and then we're going to like the bank rec. But the controller has an impact on many accounts, right? Okay, so type of control, pervasive, shows that the controller is a very harsh person, but they take procedures very seriously. So this reduces the controller. So I give you the answer. Bank rec is a cash issue, but this is another difference that the controller cares much about the procedures in journal. Phone at the top. That's what we like to hear when it's pervasive. Decreases controllers. Right. The new head of purchasing has added 6 new vendors to the approved vendor list within the first 2 months of employment, since the vendor offer products and services at much lower prices compared to other vendors. The CFO did not bother with the usual new vendor verification process. What is this? Is this pervasive? Is it pervasive? Yes, pervasive. Thank you, Christina. Right, because we're talking about the new head of purchasing, the CFO, right? C-suite again. So he has impact on many things, tone at the top. That's why it's a pervasive, and that would increase your risk. It is pretty easy. Right? You guys are too good for this. Increase control risk. The number of warehouse staff calling sick on the day of the annual inventory count. Warehouse manager could have postponed the count to the other day, but decided to go ahead with the count and instructed her staff to only check initial count results. Okay, so there's this double count check, but instead of pushing another day, she's like, oh no, we're gonna have to do it now. So what is this, pervasive or is it assertion level? Assertion. Oh, that's pretty good. Why'd you say assertion, not pervasive? Why?
I was gonna say because it's concerning inventory count, and it's gonna affect the inventory value basically.
Very good. So David, you convinced me. Patrick, it seems like you put assertion with a little question mark. So the reason why David says this is because we're talking about the warehouse manager. We're not talking about like the controller, the CFO, or CEO. So look at who's the person, and if it's one specific account, then it's assertion. So yeah, and then this would increase control risk. To complete the financial statement on time, the AR manager worked all night to estimate the allowance for doubtful accounts. The manager conducted a thorough review of each customer credit balance. The allowance estimate was thoroughly reviewed by controller, who noticed and corrected a couple of minor errors. So what is this? It's a bit tricky one. Assertion. Patrick, you taking the same answer as David, or are you gonna be okay, same answer? Yep, okay, perfect. Yeah, so the reason why it's assertion, right? Because we're starting from the AR manager again, but you might say like, oh, well, there's a controller, right? But we're starting from here, which is AR manager, and then going to the controller. Even if this person touches many accounts, well, in this case, we're just talking about the AFDA account. And would this increase or decrease the control risk? Decrease, perfect. All right. Decrease in control risk. Over the past several years, the external auditor of Nicola Inc., a manufacturer of children's toys, in its management letter expressed a concern about the company's weak internal control. In response to address some of the external auditor's concern, last year, Nicola Inc. established an internal audit department. Is this pervasive or is it the assertion level? Pervasive. David says pervasive, but he's not too sure. Okay, pervasive. Now he's sure with the. Okay, he's yelling at me. Pervasive. Okay, yeah. So that is pervasive because who's responsible for all the controls? It's management, and they decided to hire a new team that would come in and help them out for the internal audit. So yeah, that's pervasive. It shows that management has no good intention, right? Maybe because they're not CPA, so they don't know like what's the good controls. But now they heard that the controls were bad. They're taking their the good grades to do it. That's why it's pervasive, and that would increase or decrease control risk, right? It would decrease control risk. Okay, decrease control risk. Oh. For each error, fraud, and other irregularity, identify one or more types of controls that were absent. For each error or fraud and other irregularity, identify the objective that have not been met. For each error, fraud, and other irregularity, suggest a control to correct the deficiency. Okay. Proper. So these are the for A. So it's going to be one of these. So if you want to take a picture or just note it down real quick, or maybe because you memorize it for your midterm, you know it by heart now. Okay, let's go. So
Sorry, Danny.
Yep.
Sorry, can you just go back 2 slides? I missed something.
This or the other one?
No, the previous one.
Yes.
Okay, just a sec. Okay, thank you.
Perfect. I'll also post the solution, so if you want to take a look, it'll be there as well, or take a screenshot. Oh yeah, because it's a video. Yeah. I'll be posting it afterwards. I'll just won't be posting the the multiple choice questions, but it's on it'll be on YouTube, so you could take a screenshot. Okay. So for question 3, absent control objectives not met, then controls to correct the deficiency. The incorrect price was used on sales invoice for billing shipments to customers because incorrect price was entered into a computer file. So out of the 5, which control is it that's absent here? Which one of the 5 is it? Which one of the 5 here? 2, 2, 2 independent checks. Here we're going to be talking more about adequate documents recorded, because right, the documents that you have at the beginning, there was a mistake on it, means that you don't have the adequate document recorded, and then you're putting in the system. That's why you have a mistake. For B, which objective is not met? Which one do you think it's not met? Okay, so this will be I think it will be a bit hard for you guys to know. I'll just give you for the first answer. So it's that the transactions are not being recorded at the correct amount. And how could you fix this? So I'll just give you for the first answer, like control to fix this error, you have periodic review by someone, right? Maybe here was what the invoices. You can have someone from the AR accounts check if was there a mistake or something. So just have it reviewed by someone. Okay. So for the next one, yeah, I'm sorry for this, guys. It wasn't like that before. My PowerPoints are like it's trying to give me a OCD here, but anyways, let's go. A vendor's invoice was paid twice for the same shipment. The second payment arose because the vendor sent a duplicate copy of the original to 2 weeks after the payment was due. So problem here is that invoice, we paid it once. Now they're sending it, by accident, and the vendor another time, and no, we actually paid it again, right? So David, you say 5. I don't know what 5 is. Christina says independent checks. Okay. Independent checks. Okay. 3. Actually, I'm just gonna take a picture of the list. It's like you guys are telling me, yeah. What am I? Yeah, am I telling here? Good. Two seconds. Let's see a pig. Okay. So you guys are saying more of a 3, maybe a 5. In this case, it would be more of like, having proper authorization and transaction and activities, right? Because it looks like someone just paid it off and didn't have like the proper authorization. That's why they paid it twice in that way. You could have someone check it, but here the problem is more that you don't have the proper authorization. That's why you paid it twice. So what's the objective that's not being met here? What you guys think it is? Maybe that it was paid twice, right? So having duplicate invoice paid twice, there's nothing that's preventing and paying the invoice twice. So what could we do for this? What's the control to correct the deficiency? Yes, so Patrick says system to detect duplicate payments. Yeah, you could have like maybe something that's no more preventing, have something that's automated control to prevent someone from entering something twice. Because yeah, you could have someone like independently check you, but like, are you going to do that for every time? Like, is your partner going to come in and check you every time that you're going to be, inputting something? So let's say that your postal code, you can't be writing. There's a specific format that you have to do. If you don't do it, well, it'll say like this is not valid. Right, so maybe if you paid it once, then you'll say, right, for invoice XXX for the month of April, you already paid it, so it'll like just bounce back. Okay. Okay, so employees in the receiving department stole some side of beef. When a shipment of meat was received, the receiving department filled out receiving reports and forwarded to the accounting department for the accounting of goods actually received. At the time, 2 sides of beef were put into employees' pickup truck rather in the storage freezer. Okay, so which absent control is this? Should be relatively easy. This one, right? We're working in the industry, beef industry, and then people are just like stealing the beef. They're leaving outside with it. Yes. So David says physical and logical control over assets. Yeah, so that's number 3, physical control. So what's the objective that's not met? What's the objective? There's nothing preventing from stealing. Okay, there's nothing preventing from stealing the beef. And now tell me, what should we do? What should we do? Right. No employee cars in pickup section. Yeah, you could do that, but let's say I take it from my friend and I walk out and then I run with it, you know? Maybe it's not a whole beef, but it's a leg of a beef, right? I could go and sell it. So yes, so I would say Patrick says inventory count, that's good. So you would maybe check every time like there's a every time there's a truck that comes in, you do inventory count. But what's good also is I could put security cameras. Put security cameras, make sure that if sometimes you could have like a fake security camera so people know that there's a camera so they won't steal. Or you could have these what's it called? Like these pins like you put on the beef, and then if you walk out, it beeps out. So that's one of the things that you could do. Need to have additional check of inventory and additional physical counts on inventory. Yeah, great. Okay, so based on facts in each scenario, recommend the most appropriate audit approach. So Big Bank is a multinational bank that operates across the globe. Each day, the bank processes billions of monetary transactions. The bank has a large, well-established internal audit department. Last year, internal auditors reported to the board of directors about some control weaknesses that they had identified. These weaknesses are currently being addressed by the bank senior management. So now they're trying to ask us, is it combined or is it more of a substantive? Okay, combine. Okay, so why do you think it's combined, guys?
I said combined because I think it's like they're sort of they're testing controls of it. So it's not purely substantive.
Okay, so here it says the bank processed billions of monetary transactions. Okay, so there's a lot of transaction. Usually when it's very automated, and then you have something that's billions of monetary transaction. Can we do substantive? Exactly. So Serena says because they have control weaknesses. So we can't. I don't know what you're answering no to, but like it'll be hard, but we still have to do it because there's control weaknesses that they have identified in some places. That's why Patrick and David, before you said combine, that's why we should take combine, right? Because if we doing test of controls, maybe we could do it for something that's very highly like automated, right? But in the places where there's control weaknesses, we're gonna have to do substantives over there because you can't really trust those area weaknesses. So yeah, so first thing that we have to do is look at the one at the top, establish internal audit department, so that's good. So the control risk is low, but there's high volumes of transactions, so you would want more of a control-based approach for the high volume transactions. And because there's control weaknesses that have been identified by internal auditors, but does not mean you cannot take a combined approach. Job auditors to identify any control weakness are just by the bank senior. So you could take it as a control, but you also have to balance it with the substantive testing as well. Okay, so that's why at the end of the day, it's the combined approach, right? Remember that we can't be using combined, test of controls on the overall perspective. It has to be combined approach. So you'll see in the answers here is most like combined. But for some parts, right, you can use test of control in that part. Okay, in the past year, after starting to work as a controller, Tony has established a strong control environment, and Tony at the top to ensure employees operate ethically, adhering to stated policies. Tony holds daily management meetings to review operations and financial information. Budget and actual results are also reviewed by Tony, who interprets the result and sets the direction for the next day. So what are we thinking here? Okay, David, you're saying combine. Why would you not say just control, test of controls? Because it looks like here the controls are are good, so control risk is low. Okay, so David, you said test of controls. Are you sure we're only doing test of controls? Here we're talking about the overall perspective, right? So even if test of controls are, the control risk is low, can we just do the test of controls?
I was gonna say there's no like identification of like that it's like they do billions of transactions every day. So we might do a little bit of substantive procedures.
Okay,
'Cause you
so
said
if we
you
do,
never
sorry, go ahead.
Because I remember, I think you said you never do, you always do a little bit of substantive procedures.
Exactly. So what would be your overall audit approach?
Combined, almost.
Combined. Okay, perfect. So Tony has meetings about operation financials, the usual word, yada yada. How do do much control environment? We're therefore assuming that we will follow procedures and controls. We're doing the combined approach. So whatever they said, but remember that since yeah, the controls are we're assessing them as control risk as low, but we still have to do substantive either way. So that's why we would still take the combined approach. A year ago, LVS Sports is a large chain of stores that carry sports equipment, hired a new controller. The controller took it upon herself to conduct walkthrough of each accounting process. The purpose of the walkthrough was to identify and fix any control gaps. After the gaps were fixed, the controller hired a consultant to review whether the updated controls improve LVS Sports control environment. The consultant reported back that on paper, the updated controls were really good, but in most cases, staff did not follow them. So now we're looking at test of controls. So guys, put in the chat, test of controls, what are the two things that we're looking at? What are these two things? Test of controls, there's two things that we're looking at. Is it designed effectively? And what's the other one? Yes, operating effectively. In this case, is it designed effectively? Yes, but if it's not operating effectively, because in most cases staff did not follow them, so that means that control risk is high, and that's why maybe we're not even going to be using the controls, because like we're not going to be trusting the staff that didn't follow them. It's all irrelevant now, so we're just going to be doing substantive. Okay. Right, so substantive, even the controls are good, people using them are not competent. But if we would use a combined approach, need controls to be designed effectively and operating effectively. If the controls are designed effectively, but the staff is not following the controls, then the controls are not operating effectively, and that's why we would just use the substantive approach. Okay. Over the past 12 months, Too Fast, a private consulting company, has lost half of its accounting staff to retirement. Or over the past 6 months, the company has relied on temporary staff agencies to fill the vacant positions. Fraser, the company's new controller, is not happy with the temporary staff provided by the agencies. They're mostly new university grads with little prior work experience who make a lot of significant mistakes, right? So we had these, these people that have been working in the industries for maybe 30 years, they're retiring, and now they're hiring, I don't know, accountants from UCAM, okay? I'm just teasing them, but like, they do significant mistakes, and that's something that you would look at the test of controls, right? So David and Patrick say substantive, so same thing as before. Is it test control, is it designed effectively? Maybe, but is it operating effectively? No, I wouldn't put too much trust on it, because you have these new grads that are doing the work. But I trust myself as the auditor from PwC, and I'm going to do more on substantive, make sure that we have all the facts straight. Okay. If people are not properly executing the procedures, the controls are not going to work. Controls might be good on paper, but if they're not properly done, we will not be testing controls, since they would fail. That's why we take substantive approach. Okay, last one. Amelia Inc. Provides bridge design engineering services. The company has grown rapidly over the past 5 years. The last year, the company procured a new financial accounting IT system. After the system was installed, things appeared to be going well until the company realized that it forgot to install required weekly system upgrades. When the upgrades were finally installed, the system crashed several times and a significant amount of financial information was corrupted. Management is in the process trying to fix the corrupted information. So what are we going to be doing here? Kind of straightforward. Yeah, so zero now, thank you, substantive. So if we look at the test of controls, not even designed effectively, not even operating effectively. Why would I test the controls? Nah, I'm just going substantive in this audit, sadly. So if the system crashed, it seems like the IT controls failed. IT controls make sure everything works smoothly. Financials are probably all in their IT systems. So normally we would test their IT controls, which is not a good idea here since they would fail. That's why we would take the substantive approach. Okay. We're done with that. I'm just going to do the quantitative ones like MUS. It won't be too long. Should be done by like what time is it now? Oh, already 12:30. Crap. Okay, so I'll take 30 minutes max, even less. Show you a couple examples, and then I'll put the solutions for the one of the problems so you can do it yourself. But these are more for the final. I don't think like in the quiz they would ask you questions about it, but just understand it for now. It's good practice. You never know what's going to come up in the quiz. So let's do it. Won't take long, I promise. I promise. Okay. That's the Excel sheet. So document. Okay, so did you guys do MUS sampling in class? Yes, no. Okay, yeah, you guys did MUS. Okay, so I'll just do it once more, just so like if people skip class, they could like check it out. But yeah, it's not that hard. Just do it once, and you should be fine. Okay, so MUS, what you're gonna be doing is that you take. So these are all the invoices. Key takeaways that more likely if the amount is high, well, more chance of being selected. So let's say they want you to pick a sample of 3 items out of the 10. The total, you take the total sum of all the amounts. Okay, yada yada. $301. The interval that you're going to be taking is this amount divided by the sample. So that's 133. We're going to round it to 100 pesos, dollars. Now you're going to be doing like, okay, so $25. Yeah, did we reach the $100? No, not yet. So then we do this second one. Did we reach the $100 yet? Nope. This 120, did we reach it? Yes. So what's the difference? This minus this, that's the difference. Then we're going to be selecting this one. Yes. Then the second one here, do this plus this, $35. We didn't reach it, plus 7 here, $42. Did we reach it? No. Next one, $97. Did we reach it? Nope. Next one, $129. Did we reach it? Nope. Oh yeah, we did reach it. Sorry. So we do the same thing. Yada 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 yada. This is okay. Then we're gonna do 29 plus 42, 71. Perfect. No, we didn't get there yet. $82. Did we get there? Nope. Next one, $101. Yes, we're here. And then we're gonna be selecting here. Oh yeah, so guys, these are the shortcuts I'm using. It's Control D. Okay, sorry. I'm quick on Excel, so it's Control D if you want to calculate the Control D below, and then if you want to drag, Control R, all the formulas. Yeah, because I do a lot of financial modeling, so like I'll save you a lot of times. Okay, so that's pretty much it for this one here. So yes here, yes here. I'll post the solution for this one over here. Two. Now you guys did this in class. I don't have that much exercises. Maybe I'll just do it with you one problem and okay, you guys did it. Okay, so I'll just do this one. But this is more for a final. This one, did you guys do this one? Might just post, I'll post this. Oh, okay, you guys all did everything. Okay, so in that case, I'll just post the solutions. I'll just post the solutions and I also have like detailed explanation. I'll just try to take out the document. Okay. Okay, so this is mine. So I attach like all the exactly what you have to do, the amount, and like I put some notes here, like why exactly checks or payments you're making, your vendors do not cash in yet. So you guys could take a look at that. If you have any questions you don't understand, either send me a question or wait till the final, and then I think this is definitely something that you're going to be encountering during your final. So like here are the questions that could occur, like you're an auditor that would tell clients how to make an order, yada yada. The adjustments $23 and this. Okay, so just this part, the audit procedures here, it ties back to the PowerPoints on let me bring it out. Okay, here it's there. I would still learn this for your quiz. You never know, but for your final, definitely know this. But for your quiz, just know it for now. So if it's balance per bank, this is the audit procedures that you're going to be needing. Okay, sign bank information, yada yada. And I'll post this and the book, the solution for this, the second one. The second one doesn't balance, and that's why I want you to test this one out if you haven't done it yet. Or I'll just put like different. I have different explanations than probably your teacher, so like always good to see it in both lights. Otherwise than that, I think I'll let you guys go. Is there any last questions that you want to ask me on like the whole lecture, the whole tutorial? I'll stay a little bit. Otherwise, guys, spend your Sunday, enjoy, have fun. Only 1 month until the end of the semester, until David goes to vacation and Patrick. But until then, study hard. Yeah, I'll just see if you have any questions. I'll be there. David. No problem, no problem. Thank you, Serena. Thank you, Patrick. Thank you, Christina. God's work. Audit God's work. All right, try everyone. Baza, did you have a question? Nope. Okay.